Welcome to the ProfitMaxx software tutorials. This tutorial series will help you better understand the setup of your ProfitMaxx software and let your service department realize the benefits of proper technician management much quicker. Let's get started.
Welcome to the tutorial for the Unbillable Time Analysis Report. This report is an analyzation of how well you and your technicians are managing their time spent in activities that cannot be billed for. No labor force in any industry is capable of 100% productive time. Having said that, it is possible to manage this time to a minimum, and this report lets you know how well you're doing at just that. Keep in mind that when you're looking at this, or any of the other reports in ProfitMaxx for that matter, you can press the F1 key on your keyboard for detailed information of each section of this report. Unbillable time is usually the single greatest expense to any trades company. It is imperative that you know what your revenue per billable hour is and just how much it's costing you to have your technicians doing things other than those that you can bill for. You need to continually strive to reduce unbillable time throughout your company. For this tutorial, we'll be using the Unbillable Time Analysis Report. When you run this report, ProfitMaxx will show you the unbillable time performance for each technician on your team as well as the summary for the team as a whole. We'll go through each of the values shown on this report so you understand exactly what it's telling you. Each technician is identified in the upper left-hand corner of the page. In this case, we're looking at Bruce Dern's performance. This analysis report pulls information from other detailed reports within ProfitMaxx. Source reports are always identified at the bottom of the analysis reports. For this analysis report, information is being pulled from the Lost Opportunity Report and from the Key Performance Indicator Report. The Lost Opportunity Report can be found by clicking on the Forms and Reports icon on the toolbar within ProfitMaxx, then on Service on Track, then on Track Overview, then Team Performance, and finally on Lost Opportunity Report. The Key Performance Indicator Report can be found by clicking on the Forms and Reports icon on the toolbar within ProfitMaxx, then on Service on Track, then on the Key Performance Indicator Report itself. Let's start going through this report and explain each of the numbers. We're going to start out looking at Bruce Dern's Unbillable Hours report. His name can be found in the upper left-hand corner of the page. First is the Manager Applied Hours. This is the manager applied time your technicians list on their timesheet using the AO1 action code. This is the only action code in ProfitMaxx that has a name on it. That name is that of your service manager. This action code should only be used at his discretion, not at the service technicians. This is the time spent doing paperwork, inventorying, restocking their vans, washing their vans, etc. Let me also point out that when I refer to doing paperwork, I'm not referring to completing the service tickets. Many techs will sit in the shop at the end of the day or at the start of the next day completing all the paperwork for the calls they ran at that time. This paperwork needs to be completed while still on the job. How can you accurately remember all of the times and details and everything that happened to you throughout the day? You can't. And neither can your technicians. Allowing them to handle their paperwork this way opens up the door to underbilling, forgetting parts, the parts that they used, and loss of detail in the final work order. The goal for manager applied time should be approximately 5 hours per month. In ProfitMaxx, the goal and setup is defaulted at 5 hours per month. This is editable, so you can change it to meet your company's particular culture. Some companies will start out with this at 10 hours per month to get started, but if you choose to do this, you need to get yourself down to the goal of 5 hours as quickly as you possibly can. Manager's applied time on this report is displayed based on the period of time that you set for the report. For instance, if you run the report for July 1st through August 15th, approximately 1.5 months or 6 weeks, and your goal is set for 5 hours per month, the goal on this report would automatically be adjusted to show 7.5 hours, or very close to that. Next is the actual. This is the actual amount of time that Bruce spent for the reporting period in AO1, Manager Applied Time. You can see that he spent a total of 7.91 hours for the month of July in Manager Applied Time. The difference is arrived at by simply subtracting the goal from the actual. If the technician had less manager applied hours than we expected, a 0 will be displayed. We're looking for areas of improvement, so when the tech meets or exceeds our expectations, the difference will always be shown as 0. We don't want to penalize him for meeting or exceeding our expectations. Bruce failed to meet the goal of 5 hours, and he exceeded that by exceeded it by a total of 2.91 hours. Next, the average revenue per billable hour is specific to each technician. It's that individual technician's actual average billing from all billable service calls from dispatch time to end time. As you can see here, Bruce's average revenue per billable hour is $130.83. Possible lost revenue is the amount of time from the difference column multiplied by your expected average revenue per billable hour. This is a potential lost revenue from overusage of the AO1 action code. Because Bruce exceeded our goal, we'll multiply his 2.91 hours times our $130 per hour to come up with the possible lost revenue of $380.72. The next line is the unapplied hours. This is the time captured by ProfitMaxx that is not recorded on your technician's timesheets. This should consist of the time between when the service technician finishes a repair and their next dispatch. All other time should be accounted for on the timesheet throughout the day. Even the time between calls should be reduced as much as you possibly can. It's a good practice for the technician to call into the dispatcher 10 minutes before he finishes up the previous service call. That way he can let the dispatcher know that he'll be ready for another call pretty quickly. During those last 10 minutes, the technician can then wrap up all the paperwork, collect the check from the customer, those types of things. Also during that 10 minutes, that gives the dispatcher time to check to make sure the next customer will be home, let them know that your tech will be there shortly. During that same telephone call that they're making, they can inform the customer the technician will be collecting payment at the end of that call, and find out from the customer, will you be paying with cash, check, or credit card. All of those details can then be passed on to the tech when he calls in to let the dispatcher know that he has now completed the call. If your tech uses this practice, they can all but eliminate any unapplied time between service calls. The goal for unapplied hours is defaulted and set up at 3 hours per month. You can also change this goal as needed to meet your company's culture. This goal is also displayed on the report based on the time period that you set for the report. Again, for example, if you run the report from July 1st through August 15th, and the goal is 3 hours, the report would show this goal automatically adjusted to about 4.5 hours. The actual is the actual amount of unapplied time by ProfitMaxx for the reporting period. You don't have to add this up or enter it in. ProfitMaxx will look at all the time entries made throughout the reporting period and total it up automatically for you. Bruce didn't have any unapplied time throughout the month. The difference column is arrived at by subtracting the goal from the actual. If the tech was below our goal, again a 0 will be displayed. We don't want to penalize the tech again for doing a good job. This being the case, Bruce has a difference of 0. The average revenue per billable hour will be the same for all 4 lines on this report, that being the $130.83 per hour. The possible lost revenue is the amount of time from the difference column multiplied by your expected average revenue per billable hour, and shows the potential lost revenue from excessive unapplied time. Since Bruce had none, there's no lost revenue from unapplied time. The next line is for customer no-show hours. How much time is your guy sitting in the driveway waiting for the customer to return or show up for a service call that was previously scheduled? The goal for this should be 0. This is a dispatch issue. The dispatcher should call and confirm all appointments before sending a technician to the job site. If the tech calls in to let the dispatcher know they're almost done with the previous call, the dispatcher will have more time to accomplish this. The actual is the actual amount of no-show waiting time for this reporting period. This shows you how long your tech sat in the driveway before going on to the next service call. You'll likely find some of the techs don't wait. If the customer isn't there, they call in, get their next call, and they're on their way. Yet, others will sit and wait all afternoon because it's easier. Bruce had a total of 1.33 hours throughout the month on customer no-show wait time. When we subtract the actual from the goal, the difference will tell you if they exceeded our goal or not. Since we don't want any customer no-show time, Bruce exceeded our goal by 1.33 hours. Again, the average revenue per billable hour will be the same as described earlier. The possible lost revenue column shows the potential lost revenue from excessive customer no-show waiting hours. Bruce had a total of $174 in lost revenue. Next is the callback hours. This is all the time spent performing callbacks, whether this guy was the original technician or not. Now the goal for this is defaulted and set up at 2.75 hours. This comes from years of experience and analyzation of over 30,000 service calls. This too will be adjusted on the report to reflect the time period that the report was run. Again, if it was run for more than just 1 month period, the report will show this goal being higher. Bruce actually had 10.5 hours on callback service calls. The difference is the difference between the goal and the actual. Again, if less time is spent performing callbacks than the goal, a 0 will be displayed. Bruce exceeded our goal by 7.75 hours. The average revenue per billable hour, again, is the same as before. So the possible lost revenue is the difference times the expected average revenue per billable hour for a potential lost revenue from callbacks of $1,013 for Bruce. Starts to get expensive. The total possible lost revenue is the total of all 4 categories of possible lost revenue combined. Bruce had a total of $1,568.65. Now the next field is the callback revenue collected. This credits the technician for any billable work they found while running callbacks that was not covered by the callback itself and was performed and billed to the customer. This new revenue will offset some of the losses this tech is experiencing. If it had not been for the callback that he ran, this revenue wouldn't have been possible. This being the case, we're going to give the tech credit for it. Bruce didn't have any extra revenue when he ran his 10 hours of callbacks. So then we come to the net possible revenue lost. This is the total revenue lost minus any revenue dollars that were collected on callback service calls. In Bruce's case, that totaled $1,568. The next box we want to look at is the billable labor ratio. The billable labor ratio is the number of hours a technician spent on billing service calls expressed as a ratio against all of their unbillable time. The goal here should be 10 to 1. In other words, your technician should have 10 billable hours for every 1 unbillable hour from all 4 of these categories combined. Bruce has a billable labor ratio of 8.5 to 1, or 8.5 billable hours for every 1 non-billable hour. Typically, having a significantly lower than 10 to 1 labor ratio is usually due to high unapplied time or manager's applied time. Well, that covers all of Bruce's numbers. At this point, let's move on to the next technician. Since we've been through this once before, I can move through this one just a little bit quicker. We're going to look at Bryant's numbers. Again, we can see his name in the upper left-hand corner of this report. First, we've got the manager applied hours. Our goal is the same for our entire crew, 5 hours. Bryant actually had 4.42 hours. That being the case, he was below our goal or our target of 5 hours, and so we have a difference of 0. The average revenue per billable hour here is $81.66, but since he didn't exceed our goal, we have no lost revenue for manager applied hours. On unapplied hours, our goal is 3. Brian actually had 6.08 unapplied hours. Again, remember, that's all those little minutes here and there between service calls that are unaccounted for on any timesheet throughout the month or throughout the reporting period. He had 6.08 hours of time unaccounted for. That means he exceeded our goal by 3.08 hours. When we multiply that times our average revenue per billable hour of $81.66, we have possible revenue lost of $251.51. Next is the customer no-show hours. Again, we don't want any customer no-show hours. And we can see here that Bryant didn't have any either. So that tells me that in our company, we're doing a pretty good job of having the next call ready to go and confirm that the customer is there before we dispatch a technician out there. this case, we had no difference. Again, since we didn't have any difference, there's no lost revenue. On the callback hours, our goal is 2.75 or less. Brian had a total of 12.92 hours, so he exceeded our goal by 10.17 hours of time throughout the month. When we multiply that times our average revenue per billable hour of $81.66 for Brian, that comes up with total lost revenue of $830.48. Again, if he's running a callback, that means that's another service call he can't get to where he could actually be collecting money. So this is lost revenue. Our total possible lost revenue for these four categories tallied up to $1,082. When he was on those 12 hours of callbacks, almost 13 hours, he didn't collect any additional revenue, and so his total net lost revenue was $1,082. Now, Brian's billable labor ratio was 10.3 to 1. So in this particular case, again, what that's telling us is that for every 10.3 hours he's billing, he has one non-billable hour. Again, 10.0 to 1, 10 to 1 is the goal. So Brian's doing pretty good in that area. However, you can see that he does still have, those callback hours certainly need to come down. Let's move forward to the third technician, Rob Roy. Again, we can see Rob's name in the upper left-hand corner. Again, we'll move through this just a little bit quicker than we have in the last two times. We start out with a goal of 5 hours. His actual was at 5.5. He exceeded that by a half hour. Rob's average revenue per billable hour was $100.12. So when we multiply that times his half hour that he was over our goal, his lost revenue for manager applied time was $50.06. Unapplied hours, our goal is 3. Rob didn't have any. So his difference obviously is 0. He exceeded our goal. And so therefore we have no lost revenue at all. Customer no-show hours, again, our goal is 0. He waited 45 minutes throughout the month. So we have a difference of 45 minutes. When we multiply that times our $100.12, we wind up with a lost revenue of $75.09. Callback hours, again, our goal 2.75. Rob actually had 15.17. That's a difference. He exceeded our goal of 12.42 hours. Are you guys seeing a pattern here? All three of our technicians now have massive amounts of callbacks. That's an area that we need to focus on within our company very, very quickly. When we multiply that 12.42 hours times our $100 per hour average revenue per billable hour, we had lost revenue of $1,243. When we tally all those up, our total lost revenue for the four categories is $1,368. Rob also did not collect any money when he was running those callbacks. So that puts his net possible revenue lost at $1,368. Now, Rob's billable labor ratio was 20.3 to 1. Again, goal is 10 to 1. So at that point, for every one non-billable hour, we're getting 20.3 billable hours out of Rob. Think of what that could be at if he got his callback hours under control. Now let's look at Sean Kemp. Sean, again, goal of 5 hours for manager unapplied time. Sean had 5.67. He exceeded our goal by 0.67, just a little over a half hour. Sean's average revenue per billable hour is $123. So when you multiply that out, we have lost revenue of $82 for the month. Our goal for unapplied, again, is 3 hours. Sean actually had 1.58. So again, he did better than our goal. Didn't have any difference. So when you multiply 0 times to $123 an hour, we have no lost revenue. Customer no-shows. Again, goal of 0. Sean actually had 0.75 hours. He also waited 45 minutes, so that exceeded our goal by 0.75 hours. We multiply that times our $123 per hour, comes out to $92.63. Here again is our weak spot, callbacks. Sean had our goal of 2.75 hours. Sean had 15 total hours in callbacks. He exceeded our goal by 12.25 hours. So when we multiply that times our $123 per hour, that's lost revenue of $1,512. Think about all the callbacks our entire team had. Every one of them had 10 or more callbacks within the month of July. That's 40 plus callbacks per month. That's 40 service calls that this company could not get to because they're going out trying to do the job right that they didn't get right the first time. So our total possible revenue lost for Sean, $1,688. He also didn't collect any revenue when he was on those callbacks, and so his total revenue lost was $1,688. The billable labor ratio for Sean, 11.6 to 1. Again, if they could get these callback hours under control, their billable labor ratios would be unbelievable. So that brings us to the team summary. The last page of every report will always be a summary for the entire team. And again, if you remember, Bruce Dern's lost revenue was $1,568. Bryant's was $1,082. Rob's was $1,368, and Sean's was $1,688. That makes the total lost revenue for our team of $5,707. Now, again, remember that's just for the month of July. Over the course of a year, this pace would total $68,492 in lost revenue, simply because we can't fix it right the first time. That has major implications to our company. Major impacts on the profitability for our company. This is one of those areas within this particular company that we're bleeding very badly, and we need to fix it very quickly. Now, what are the source of those callbacks? Is it because the technicians don't need more education? Is it because they don't have the right amount of parts? Is it because their trucks are so messy they can't find the parts that they have on it? Is it because some of these are two-person jobs and we're trying to make one person do it? Is it because we're trying to make the techs take too many calls within a day, and so they're having to rush through them? Whatever the case is, find the source of the problem and eliminate it, because doing that would save, in this particular case, $68,000 per year. So what did we learn? Well, first, unbillable time, again, is typically a trades company's single greatest expense. The average unbillable time for service departments across the country is somewhere between 50 and 60%. In other words, half the time you're paying your technicians for, you can't bill somebody for. That gets very expensive. Utilize everything that ProfitMaxx is giving you to reduce your unbillable time as much as you possibly can. One of the things you'll want to find out, if you don't already know it, you will once you start entering data in ProfitMaxx, is what is your revenue per billable hour? Every hour converted from unbillable to billable is revenue for your company, and much of that revenue is profit because most of your overhead is already paid for. So make sure that you eliminate that as much as you possibly can. Hopefully, this tutorial has given you a better understanding of the Unbillable Time Analysis Report. Keep in mind, again, that you can replay this tutorial anytime you need to remind yourself of what the report is telling you. Also, when you're looking at this report in ProfitMaxx, you can press the F1 key on your keyboard at any time to get more detailed information about every field on the report. This is the end of this tutorial. Select the next tutorial you wish to view. Thank you.